Hello and welcome to another training for VITA Services for West Michigan. My name is Amanda Grover and today we're going to be moving on to our second part of our tax training for VITA Services for West Michigan, and that's when you actually can start the return and start talking about some of the very foundational stuff dealing with the tax returns, and that's filing status and exemptions. So we're going to go through some basic information from the intake and interview process that we learned about and how that's going to apply in starting the tax return itself. So this is just a little bit of an outline to kind of show you and guide you where we're going to be going through the training and how the different parts of pieces work together. So first, this is the tax shell. This is the tax form in a nutshell. So we start with income. And then deductions are subtracted from the income, and that will give us our taxable income as well as the tax rate that the person is taxed at. And then once you have the tax rate, you can look at credits as well as the tax that's withheld, and that will give you the refund or the amount due on the tax return. So this is just a little bit of a visual aid to help show the process and how we're going to frame all the topics that we talk about for our tax law training here through this training segment. The tax return and the tax software will walk you through a tax return based on the 1040. Now, you don't have to know a lot about the 1040 itself. That's the form that the taxes are printed on. That's the form that the software follows, but you don't actually fill out specific forms within our software. So I'd just like to reference this because a lot of our preparers and volunteers are used to working with a 1040 form. So I do like to give it a frame of reference, but if you are looking at a 1040 form and are familiar with it, today we're going to talk about that first top segment, and that's just what this page is showing you, that we're going to go through some of the basic demographic information that we have to have for the tax return, and that has a huge impact on tax rates, tax credits, and the various things that we'll move into discussing. So this is actually what it looks like in the tax software that we use, TaxSlayer, and this is what you're going to be very familiar with filling out as you volunteer with VITA Services for West Michigan. This is just a snapshot. You can see it's got some very basic information, and this is all coming off of that intake and interview. So it shouldn't be too confusing. The tax software does a good job at walking you through it and following the forms that the client has already filled out. But this is also a good opportunity for you to go ahead and ask the taxpayer that you're working with and confirm some of the information that they've indicated on that intake and interview form. So we're going to go ahead and jump right into filing status and what the filing status, the impact on the tax return, and what that means for each individual. The filing status obviously has a huge impact on how much tax is owed, so tax rates, as well as possible deductions and tax credits. So the status is based on the client's marital situation, and it can vary from year to year, but typically people know what they're coming in and filing. There are some tricky circumstances that can come up, and that's where your resource information can get very helpful. But just keep in mind that if you keep breaking everything down, the resource material will really help you walk through it. So let's jump in and learn about the 5 different filing statuses that somebody can choose from on their federal tax return. The first segment for people who are married, you can either select to file a tax return under married filing joint or married filing separate. And then if it's a single person, there's the option of filing single, head of household, and qualifying widower. So these are the 5 possible statuses. Let's jump into what each of these mean, because there's some, like I said, very big implications based on the filing status that you select for the client you're working with. So married filing joint return, this is the most advantageous filing status that you can choose for someone. So the couple does have to be married, and it combines all the income and expenses and household situations for the couple onto one tax return. Even if one spouse has no income, that's okay. You can still do the married filing joint status. And it really is the best filing status if it's applicable to use for a couple. You can't use this filing status though unless they are legally married. So every now and then we do get that question. To do this correctly, the couple does have to be married. They have to have been married on the last day of that tax year. So for the upcoming tax season, the clients would have to have been married on the last day, so December 31st of 2016. And it's a pretty basic, it's a pretty simple filing status. There's not usually too many questions or discrepancies aside from just understanding that if they were married on the last day, that's the filing status to use. Now, if they come in and they're divorced and it's 2017, as long as they were married that last day of 2016, they can still go ahead and use that same married filing, joint filing status. Couples do, however, come in and it is possible for them to do a married filing separate. Now, without getting way too involved in the personal matters of somebody's life, just know that this is the least advantageous filing status for somebody to use. It basically means that the couple does not want to file on the same tax return, so they actually file two of their own individual tax returns. So they're not combining income or expenses, and that also means, though, that they can't both claim any children that they may share. They're going to have to split up who gets to file what dependent on what tax return. It can get kind of sticky and tricky. It's the most disadvantageous filing status, as I indicated. So if somebody is filing, doing the married filing separate return, that means oftentimes that their deduction amount is decreased, so they don't have as high of a reduction for their taxable income. It also disqualifies them from the possibility of a couple of different tax credits, and it overall is not a very good filing status to use. Now, a lot of the time people come in and want to utilize this married filing separate filing status. They indicate that they've been filing separate tax returns for years. This is just how they do it. Again, we don't want to pry into anybody's lives, but just make sure they know about the injured spouse form. The injured spouse form is a very basic form that we can fill out very easily in the software, and what it does is it allows for a person to have any debt that they may owe paid with their portion of the tax return, but the other person that's in the marriage, they don't have to take on the debt from their spouse. So that's typically the reason why a lot of people want to do the married filing separate status. It's because one of the spouses has a huge debt that they owe, so they don't want to file the same tax return because then the IRS will take their whole tax return amount. If you put this injured spouse form in, then it will only account for the debt that is owed by the person based on their earnings. And then the other spouse can get the remaining portion of the tax return. So that is a nice loophole and a nice possibility. Just be able to explain that, and the form that you use for that is very easy to access in the software, very easy to fill out. So don't be intimidated by that. Every now and then a person comes in and they want to do a married filing separate return, and that might be because they have been abandoned by their spouse. So they may have split up 20 years ago, but they're still legally married. If that's the case, you can do, based on the abandoned spouse circumstances, they can do a single status. So make sure you're utilizing your 4012 resource. There's a decision tree in there that goes through these filing statuses, especially with this married filing separate status. There's some caveats that may come up, and if you go through your exercises and need some help kind of working through the filing statuses, let us know. I will say that this married filing separate status is definitely the most complicated one and the one that ends up having the most questions. So just work through some of the examples in the book. They go through circumstances like this in your 4491W, as well as some of the practice problems on your certification. And if you have any questions, make sure to contact your site coordinator or program coordinator, and we'd be happy to go through some of this with you. For the most part, again, at the tax sites, we don't have to work through a lot of tricky circumstances like this where it gets too confusing. Single is a pretty basic filing status to understand. It basically means that you weren't married on the last day of that tax year that you're filing for. You may be legally separated, but as long as you're still legally married, then you can, or as long as you're legally divorced on that last day, even if you were married throughout the year, you can still do single. And when you're single, it also means that there's no dependents in the home. So we'll talk about a couple of more advantageous filing statuses here in a minute, but if there's any dependents, you'll want to go ahead and utilize another filing status. This won't be the one that's most advantageous for you. It basically just means that it's a single person on the tax return, and they're just filing for themselves and their personal income information. Now, head of household. This is a possibility for a single taxpayer with dependents. So I just indicated that if there were children in the home, that there's some more advantageous tax filing statuses to utilize, and this is the big one. So head of household is really designed for single parents and single people with dependents. It has to be a person that is not married and a single taxpayer. So it may be a man, it may be a woman, and then a qualified dependent person. So it could be a qualifying child or a qualifying relative that allows for this person to do the head of household status. There are a couple of caveats though. So the person has to have a dependent in the home, and the dependent must either be a relative or a child. If it's a relative, the relative has to be either disabled and has lived at the home all year and completely relies on that single taxpayer for support. It could also be a dependent child, in which case the child just has to stay in the home for half of the year, and the tax filer has to have paid all the expenses in the home for that person. That person, so even if it's a qualifying dependent, if they're 16, they can still file their own tax return to get their withholding back, but they can't claim themselves. So they have to indicate that they're being claimed on another tax return. The biggest, again, this is the most complex because there's the age and the dependent relationship as well as the household information. So again, it can be a child if they are 18 and going to school, or if they're 24, they can still be claimed on their parents' tax return as long as they're enrolled in college. Or it can be a qualifying person, and the person can be a friend, but that person cannot have had enough income to support themselves, and they couldn't have been in the home for any less than 12 months. So they would have had to have been in the home for all year. If it's a dependent child, again, they just have to be in the home for 6 months or more than half the year to be claimed on the tax return for this filing status. And again, the taxpayer has to have kept up with all the costs of supporting the dependents and paying for the upkeep on the home. So it's a little bit confusing, but your resource material is really helpful. And this doesn't come up a lot where there's a lot of questions about what the filing status can be. I think that your practice problems and your certification problems will help you get used to utilizing the resource materials very well. So don't be too intimidated by this. You'll have to work through a couple problems to really get it to stick in your head, I think, the proper way. But it's actually pretty simple in most cases that we see at our tax sites. So don't be too intimidated by that. The last filing status we're going to go through is qualifying widower. So this is a filing status that somebody can claim if they have dependents in the home and they haven't been married following the death of a spouse. So for the first year that if there's a death in the home, so say it's two parents and a couple of kids, and they live in a home and the husband dies. If that's the case for that tax year, the woman who's filing on behalf of her spouse and her, the first year they'll want to do the married filing joint, just as if the person were still alive. But for the next 2 years, as long as that single taxpayer, the taxpayer that's now single, as long as they have not remarried and they still have the dependents in their home and they're keeping up with that, the cost of living in the home, they can actually claim this qualifying widower filing status for the 2 years following the married filing joint return from the tax year that the person died. So it's kind of helpful. It's a little more advantageous than head of household. So we don't see this a whole lot at the tax sites, but do know that it exists and that there is a possibility to utilize this filing status. Again, the 4012 can kind of help walk through those circumstances and gives a really good decision tree chart that can help you go through all this information. But qualifying widower basically, again, just means that the first year that the spouse dies, they do married filing joint, and then the subsequent 2 years they can do this qualifying widower status as long as there's a dependent in the home, the taxpayer is keeping up the cost of the home, and they have not remarried. So we're going to talk about exemptions a little bit. Exemptions are a big part in calculating some of the tax information, but just know that it's associated with a specific dollar amount which changes each year, but each person on the tax return is assigned a basic dollar amount that's associated with that individual that can reduce the taxable income in the home. Each individual only gets one exemption, although there are exemptions at times for disabilities and for circumstances where somebody is blind. So that can play into the situation. And you go through that information in the intake and interview form. There is an area in that intake and interview form that asks about that. And you should be remembering that, and that should be sounding familiar following your intake and interview training. So know that that can impact the tax return. The nice thing that you, for your information, the nice piece is that the software will calculate this amount automatically for you. It'll automatically do it on the tax return. But just as we're teaching you how federal tax law works, we do want to touch base on this and make sure you have an understanding of what exemptions are. So again, each person gets one personal tax exemption. If there's a taxpayer that comes in and files a tax return, they may get 0 exemptions if they're claimed in another return. So an example of this circumstance would definitely be if there is a child in the home that's maybe 16 or 17 and they're working a small after-school job. They can still file their tax return to get back their federal withholdings, but they just have to be sure to indicate to the tax preparer that they're claimed on another tax return, in which case they'll just get a 0 exemption, and the exemption will actually go on the parent's tax return as opposed to the child's tax return. There is a spouse exemption, so if you do married filing joint, that means that you each still get one exemption, and the software will combine the exemption amount and reduce that from the adjusted gross income. There's also dependency exemptions, so anytime a person is supported in the tax home, in the home of the taxpayer, they are provided an exemption for each child. And there's also a qualifying child exemption and a qualifying non-relative exemption. And that's for the person who may be staying with the family that doesn't have any income and is being completely supported by the taxpayer. If that's the case, the taxpayer is still afforded the exemption from that person that's in their home since they're supporting that person. So again, I know I did touch on this previously, but I do like to kind of drive this home of what a qualifying dependent child is and then what a qualifying dependent relative or person is. So again, there's a relationship test. If they're a child in the home, it doesn't necessarily mean that they have to be a child. It can be a dependent, maybe a step sibling, it may be a cousin. So a lot of the time we'll see people that have that will take in children that need a place to stay for a year, 2 years, while some family things are getting sorted out. If that's the case, they just have to be in the home for at least more than half of the year. So that goes to that residency test. I did touch base on this, the age test. So the child has to be 19 or under or 24 and under if they're going to college full-time. They can be any age if they're permanently disabled. So there's sometimes where somebody has a child and they can't live on their own, that they're disabled and that they have to stay in the home even past the age of 19 and 24. If that's the case, if that's a person that the taxpayer is providing all this support for, then they can still be counted as a qualifying child. The software will just ask you to put in the name, ages, and social security information of each child. It'll ask if the child is disabled, and it will kind of help calculate this for you. Sometimes an issue comes up. It's extremely rare, but sometimes there are times when there is a custody situation and the person isn't sure if they can claim a child or not. Really, there's rules that should be followed, and we're going to go through these rules in just a moment, but I will start by saying that whoever files the child on their tax return first, the tax return will go through, and the IRS doesn't have a way of identifying if that person is actually the person that's entitled to claim the child. So there have been issues that have come up because a person will come in and their ex or their former spouse or whoever that person is has already claimed the child. If that's the case, then our taxpayers have to go ahead and utilize this tiebreaker rule. If they are in fact the person that is entitled to claim the child, they unfortunately have to work with the IRS on that and paper file their tax return. So situations that can come up they can be a little bit tricky, but your site coordinator can help walk you through that circumstance if that does come up. But if there is a child that's in the home and they definitely spend both their time completely split, it's 50-50, and there is not any sort of agreement set into place prior, then there's these tiebreaker rules. Typically it's a person that has the higher AGI or adjusted gross income that should be filing for the dependent child. There are circumstances though, a lot of the time people come in and they have a custody arrangement, so they already know who's claiming what child for what year. Sometimes parents go back and forth who can claim what child. At any rate, a lot of the time they have an understanding if there's some sort of special rule or something in the divorce decree. Parents typically are very aware of that and how to file their tax return. So it does come up from time to time where somebody's tax return does get rejected because of that dependency issue, and they're filing a tax return for a child that's already been claimed on another tax return. So I do like to just go through that exemption information because it can play a huge role in determining what the refund amount will be. So some issues with claiming exemptions, like I said, the biggest one is that a college student will come in and they won't realize that they are not supposed to take their personal exemption because they're actually being claimed on their parents' tax return. So if that does happen, the software will tell you that the person has been claimed on another tax return, in which case we can just go in, correct the return, talk to the college student, let them know that they're actually being claimed on their parents' return. It might lower their refund just slightly, but we just update the person who's filed and let them know the circumstance and ask them how they want us to handle it. We can handle it one of two ways. We can print a paper return for them if they want to come back in and kind of deal with that with their parents, or we can just change it on the tax return and they can sort that out among their parents and figure out some sort of resolution. Sometimes low-income people that are filed on another tax return, they can't claim their exemptions. So again, that kind of goes into the dependency support that we just talked about. Every now and then there's an issue where elderly parents are claimed on tax returns because their siblings are supporting them or their children are supporting them. There have been a few circumstances where one sibling will think that they're filing for the support of their parent and will claim the exemption when really it might be entitled to the other person. Again, this is very, very rare, but it is a circumstance that can come up, so we do like to review it. And also the dependents support themselves more than half of their earnings. That can sometimes come up if somebody isn't sure if they can claim their dependent in their home. If the dependent supports themselves with more than half the cost of their earnings, then they cannot claim the child unless the child is earning, so if it's Social Security. If it's Social Security, that does not count. If they, especially, that typically means they've been in the home and that there's a significant disability. That gets very costly, so they can still not count that Social Security as half of the cost of their support so that somebody else can claim them, because it's typically way more advantageous for their caregiver to claim them than for them to file for themselves. So I did mention that there is an availability and a possibility to file a dependency exemption for somebody that's a non-relative, so somebody that just lives in the home. That is a possibility, as I indicated, but there's a lot of stipulations with that, so I do want to go through that information a lot, because a lot of people will come in and ask, can I claim this person, can I claim that person? So this is kind of the rules for somebody that's just living in a home that's a non-relative. They can't be claimed on anybody else's tax return, so they can't be claimed on their own tax return. There's also limits, so they can't earn anything more than $3,950. If they earn more than that, then they can't be claimed, and that includes Social Security income. There's a supports test, so the taxpayer cannot provide more than half of their own support. That would be pretty obvious, though, based on their earnings. And then they have to have lived with the taxpayer for all 12 months, but they can be any age. But they can they have to have been in the home all year. That's the big caveat with the non-dependent relatives. So just to review everything real quick, I know we've gone through a lot of different circumstances, a lot of different small rules. Again, your 4012 publication is super helpful with going through this. I'd highly recommend just going through that workbook and that resource guide and kind of trying to get some of this straight in your head. But those examples in your practice problems and in your certification test do a really great job of going through this information as well. So again, just head of household, that means that there's a single taxpayer, there's a qualifying dependent, it can be a relative or a non-relative, but they have to have been in the home for more than 6 months or at least more than half of the year. And the taxpayer has to be the person that's kept up with the cost of the home and supported the home. We just went through some of the qualifying dependent information, but this is just a breakdown of the qualifying dependent child and dependent relative, as well as that head of household information. So the qualifying dependent child must be under 19 if they're in high school and 24 if they're in college. The taxpayer must be related to this dependent, and they have to have been in the home for at least 6 months. Now, I will say that if there is a college student in the home and they may technically be away at college, that's okay. That counts as them being in the residence. So even if they're technically living on campus or off campus, if they're in school, that's okay to claim them as being in the home for 6 months or more. The qualifying dependent relative, again, they have to have provided, you have to provide more than half of the support for the dependent relative. And this could be, again, a person that's not necessarily technically related to them, but they have to have been in that home for 12 months is the big piece. So it's not more than half the year, it's all year. They have to have been in that home, and they can't have earned more than $3,950. The head of household status, again, just to touch on that, the child has to have been in the home for more than 6 months, and the head of household, the taxpayer, must have provided more than half of the support for household expenses. So I hope this little information session helped to clarify some questions that you might have had as you've been going through your resource material. I hope that you utilize your 40-12 again and go through some of this information. There are plenty of exercises that will help you go through this. And again, if you need some clarification, and I know when I was learning all this information, it really helped me to walk through circumstances with some of our other tax preparers and program coordinators. So practice will help, and it'll help to clarify things. But do know that when you're at a tax site, the reality is usually pretty straightforward. Some tricky circumstances do come up from time to time, but it's typically pretty easy. So don't let it intimidate you. And so make sure that you watch our next webinar that we have coming up, the part 3 on income. And make sure you start going through some of the practice problems too. Like I said, I think that's really going to help you get some of these concepts straight. So thanks so much for watching and taking the time to go through this, and stay tuned for our next part 3 on income.